One of the things that can be very frustrating if you are an investor or trader in the stock market is knowing when are we in a trend and when are we not in a trend, and what can I do about it? If you have a problem with that, stay tuned. I have some answers for you. One of the biggest frustrations I've had is knowing when are we in a trend and when are we not in a trend. That applies to investments, things that are held for longer than 1 year, or trades that you do, which are generally considered those investments that are held for less than 1 year. And they're handled differently on a tax basis, at least right now. That's the way they are. But when I started out as an individual investor, I was a trend trader. The idea was to, first of all, find the trend, get on that trend, and then ride that trend. And when the trend changed, either get out or get into an opposing position. If I was long, I would go short. If I was short, I would go long. And the idea was that I was pretty much always in the markets. Well, we would go through periods of time where it seemed like the market would shoot up or shoot down, and then the next day it would do just the opposite. It was like there was just meandering around of prices, and that got to be very, very frustrating. So what I did is I set out on a trek to try to find out, not Shrek, but trek, a journey to find out when can I determine when the market is in a trend, and then if it is in a trend, then I evaluate that trend, or what are times when the market is not in a trend and I should either do nothing or take advantage of strategies that benefit from a sideways or trendless market. I was on this search for many years, and I read books and nobody seemed to really have an answer. And then I finally found one, and I went and I back tested it, and then I forward tested it, and now it's an integral part of the program that I use and that I teach other people in my classes. And it's usually the first chart I look at every day after the market closes. Is I look at this chart, and that tells us right now whether we are in a trend. And then after that, we go off in one direction and say, okay, what is the condition of that trend? Is it worth getting into, whether it's up or down? And then if I look at that chart and it says, no, we're not in a trend, then I go off in a different direction and I implement different strategies that can take advantage of a range-bound or trendless market. So I'm going to go back over to my desktop and show you some charts and explain them a little bit. And I hope that you will find this very useful. So looking at my desktop now, you see an out-of-the-box indicator. It's called the ADX, or Average Directional Movement. And I've used this indicator for a long time. But when I really looked back and started to study it and study what this indicator does, I found that it was really quite useful in helping to measure the trend. If you Google ADX or ADX indicator, it'll help you to define what the trend is. I just didn't really pay attention to that for a long period of time. Now, this is not the only indicator that I use. This is the only indicator I'm going to talk about in this video. There are some other indicators that I use to confirm this. And there's also something else that I look at that I'm going to show you a chart of. But this is kind of the main foundational indicator that I look at. Looking at this chart, we can see the prices are up above. And this is just your average bar chart, where if we had an up day, the bar is green. If we had a down day, the bar is red. It's kind of that Christmassy thing going on there, but it visually just helps you see what's happening. If you see a whole lot of red, we're usually going down. If you see a whole lot of green, we're usually going up. If you see red, green, and it's not Christmas time, well, that might mean that the market really isn't sure what it wants to do, because there is a randomness to the markets. You can't figure out everything by just looking at charts. There's a very good book that I have an evaluation on called A Random Walk Down Wall Street, and it's a very good book. In that book, the author would also disagree with a lot of the things that I teach in my class. That's okay. I disagree with some of the conclusions he's made in his book, but it's still a useful book. And I still take a lot of what he says as insight, and I try to make use of that, but then I determine myself what I want to implement and what I don't want to implement. There's also a non-randomness or a trend to the markets as well, or momentum that you can find. I use both of those together. There are times when things are random, and there are other times when there is a non-random nature or a trend nature to the markets. So looking at this chart, we can see that as prices go up and down, this line goes up and down too. One thing to be aware of right off the bat is this does not measure the direction of the trend. As this line goes up and it goes down, it's measuring the strength of the trend, not the direction. So you can see as the S&P started to really fall back in February and into March of 2020, this indicator really shot up. Well, there's other times when the market is really going up, like over the summer, we saw a really nice advance and it was going up, but this indicator was also going up. So you're thinking, oh, wait a minute, it goes up when they go down and it goes up when it goes up. Yeah, it's measuring the strength of the trend. What we want to do is when this line is getting stronger, whether it's up or down, we look at getting in trend type strategies. You're long if the market's going up, you're short if the market is going down. But then there's a huge percentage of the time, and I actually break this down in my class to show you the percentage of time that we spend in trendless environments. And that changes. Back in from 2012 to about 2016, we spent most of the time, about 80% of the time, in a trendless environment. Since 2016 forward until now, we've been trending a lot more, only to have that stop in about November of this year, which was kind of a big event. We had a presidential election, and the markets have pretty much been going sideways ever since then. And I'm recording this about halfway through the first quarter in 2021. But what I do is I look at this every day, and do you see this blue line down here near the bottom? This is the 20 mark, and anytime we drop below 20, that means we are not trending anymore. And so this is when I look at getting into sideways strategies. Then when we shift over and this actually goes above 20, and this one's actually a little better because it can give some false signals. And that's why I implement other trading rules that I teach in my classes, because things can change. And this can give some signals that are not necessarily always correct. There's no perfect indicator. That's why I combine it with other indicators as well that I'm not going to talk about in this video. But in July and into August of 2020, we were in a non-trending environment, and then that started to go higher, and we rode a pretty high wave into September. Now, for longer term investors, you don't care about that. You're investing years and decades and lifetimes. That's your time horizon. But people who do short to intermediate term type of trading, this could be very critical to you. And what I did over years of using this, when it goes above 20, that means we're in a trend, or a trend is just beginning to start. But then when we go over 30, that means we're in a strong trend. And then I keep following this. Even though the trend may turn over and start to come down, that really doesn't matter to me. We're still trending at that point. I consider it trending until this line actually drops below 20. But you can see when we got into October and then into November of 2020, we've been hovering either a little bit below or a little bit above this 20 line right here. So even though the market has had an overall upward trend to it, it hasn't been a really strong trend. We'll see an up day, then a down day, then maybe a couple of up days, then a down day. And while we're doing this, we're either at or near all-time highs. That's what the media loves to talk about is, oh, the S&P hit another all-time high today. We don't care about that. We're looking at charts and seeing what is the condition of that trend. And then for most of the first and second months of 2021, we pretty much have not been going anywhere. The markets are trying to figure out what's going to happen next. What kind of policy is going to be implemented by the new administration? What regulations that businesses enjoyed before have now been canceled? Yeah, we're in a cancel culture these days. And they no longer apply. Well, businesses have to shift and adjust to that. We're also looking at a real movement towards climate change, where that's a whole new way of defining the economy. The smart money in the markets, they're not really sure what's happening right now. They're going to let things play out. Now, they do have some ideas and they have some opinions, and a lot of the big money and the smart money, they have a lot of control. In fact, a lot of the current administration come right from Wall Street. So whether you like that or hate that, doesn't matter. That's the way it is. Now, another indicator that I'm looking at that is kind of contradicting this indicator right now is a thing called the VIX, if you've ever heard of that. This indicator helps show volatility in the market. And the general rule of thumb is when the VIX is low, it's time to go. When the VIX is high, it's time to buy. Now, that's a catchy little phrase and it rhymes and you can even sing a song all you want. But what is high and what is low? We don't always know that. And just because it's high or low, is it going to change anytime soon from being high or low? Look at this as the fear gauge. The higher this thing goes, the more fear there is in the market. This means that the smart money and a lot of traders and hedge funds, they're hedging at this point. They see prices going down, and since most of the market is geared for it to go up, when they start using protection so that they don't lose as much money, this measures that. As prices start to fall, you'll see this VIX start to go up. And there's even a VIX of the VIX, and there's a VIX on the NASDAQ, and this is a VIX as it applies to the options on the S&P 500. So this is the one that I follow closely, but I look at the other ones too. And you can see that there are times when this is actually marked some kind of a short-term bottom in the market. When this gets very high, that usually means there's some kind of a selling climax that has occurred. Now, this is what's interesting. If we go back to the other chart, you see that the ADX is showing us that there's no trend. Well, here, I use a couple of numbers, and these are more textbook numbers. And I wish this was a little bit more dynamic in the numbers because we might be changing environments a little bit. But when I said what is high and what is low, when the VIX drops to 10 or below, that means that all volatility is pretty much not in the market right now. But when it gets above 20, that means that there is a lot of fear, there is a lot of volatility in the markets. We have the ADX saying there's no trend, but yet we still have the VIX at over 21 right now. So that's contradicting things a little bit. Using both of these together can be helpful, especially when they confirm each other. So it doesn't mean we just blindly get into the market and we're just hoping and praying that the market goes up. Or once we're in, we're just hoping and praying that we can get out at the right time. No, we want to use some logic. There's a lot of information that's given off by the markets, and we want to be able to use that and be able to reach a conclusion as to what we think is going to happen next. And that's what I do in my classes. I teach people that skill. Please feel free to look at some of the videos that I talk about interest rates and other aspects of the S&P 500. So I'll see you in the next video.